Great. Okay. So this is how to properly qualify for public service loan forgiveness. I don't know if you've seen the Forbes articles where they say there's a 98% rejection rate. And that's kind of scary sounding, but my intention here today is to not have you be one of the 98%. And the funny thing is, here's the article. I'll summarize it. 76% of them were rejected for not having met the requirements. I'll spell that out for you here today. This part's funny. 22% were rejected because they were missing or they didn't completely fill out the form. So user error on that part. Now, in order to qualify for public service loan forgiveness, here are the requirements. You must be in the right kind of employment. You must have the right kind of loans, you must be in the right kind of repayment plan, and be making the right kind of payments. And we'll just go in order. The right kind of employment, here's what qualifies. Local, state, federal, or tribal government, 501c3 tax-exempt organization, and other specified 501c entities. And those are, well, that doesn't really matter. Your organization qualifies. Yay. All right, you must be a W-2 employee status. What does that mean? You cannot be a 1099, nor can you volunteer. So if you are a 1099, if there's a way to become a W-2 employee, this can save you a lot of money on student loans. You must be classified as full-time, which means it must also be 30 hours a week average. And just to be more clear on that, if you work 32 hours a week, but you're classified as part-time, that does not qualify. I had a client who worked for a school out in California, 32 hours classified as part-time, and her employment didn't qualify. So what she has to do, work somewhere else that's qualified for at least an hour to get 30 hours and be 30 hours to qualify. Because if you have part-time employment, you can have 2 different places to work at, provided you add up to at least 30 hours. But some people miss this. So first, they have to be classified as full-time. And full-time must be at least 30 hours a week. Then you must submit this form, the PSLF and the temporary expanded PSLF. This will certify if your employment counts. And when you first submit this, you want to check that red, where I put the red X at the bottom. That first option where it says, I just want to find out how many qualifying payments I have made, or if my employer is a qualified employer. If your employment qualifies, you'll get this with your name on it. This one is mine. But it'll say at the bottom, where I underline in orange, that the employers listed below are qualifying employers. So if you never got this letter, that means either you didn't apply or your employee does not qualify. So this piece of paper right here is gold. You'll want to get that. Then, what are the right kinds of loans? They have to be direct loans only. Here's a list of 7 different kinds, as long as it has the word direct in front of it. Now, if you have other federal loans like Stafford loans or FFEL loans, one option is to do a consolidation into a direct consolidation loan so that now they qualify. But there's a caveat to that, which I'll get to at the end. Most important part, though, they have to be direct loans. Now, what is the right kind of repayment plan? Any one of these that fall under income-driven repayment. There's revised pay-as-you-earn, the newest one. Pay-as-you-earn, there's an old or new income-based repayment, and then there's income-contingent repayment. Any one of these counts. The best ones are the top 2, pay-as-you-earn and revised pay-as-you-earn. Just to elaborate more, if you're on standard, extended graduated, none of those count unless you possibly qualify under the temporary expanded PSLF. And there are some certain terms to qualify for that. And if you have more questions about that, you can reach out to me later. Now, what are the right kind of payments? Qualifying payments are on time, which is really within 15 days of due date, but don't aim for 15 days, just pay it on time. Must be in full, and you have to make 120 months of qualifying payments. So if you're in the DoD, you can prepay the whole thing, but that doesn't apply to you all. And this is a nice bonus. The CARES Act waives monthly payments, so nobody's paying on the student loans. It also halted the interest, and this whole year has counted towards the 120 months, so it's a freebie. Again, make sure you file that PSLF employee certification form. And if you haven't, don't worry, it'll backdate to the first day of your employment, provided you are full-time. Now, the 120 months do not have to be continuous. You can take a break, you can transfer employment, you can change full-time to part-time. You just resume when you go back to full-time qualifying employment status. The payments also do not have to be continuous. They just have to add up to 120 payments. And it's a great idea to regularly submit that the PSLF employee certification form. That way you can make sure they have the right number of months so that you're auditing them to ensure that they are properly crediting you every single month. Now, after you have 120 qualifying payments, submit this form again, except this time check the bottom two boxes. The second one says, I believe I qualify for forgiveness under PSLF right now, meaning you have your 120. And also check the last one just because you might as well. It says, I want a forbearance while my application is being processed. The reason that's important is because after your 120 months of qualifying employment and payments, you still have to be employed at that employer while they're processing this, which means you could be paying another month. So that's why that last one's a great option, because it means after your 120, you're not paying, but you need to still stay employed, which is what this screen says. You must remain in a qualified employment status even after the 120 qualifying payments are made. So this could take a few months of processing time. But just do not quit on 120 months and 2 days, just because you could pretty much forfeit your 10-year forgiveness program, and now you're back into the 20 or 25-year program. So why is that important? This is one of the biggest benefits of public service loan forgiveness. Any amount forgiven is not taxable as income. However, if you for some reason leave public service loan forgiveness, then not only are you in the other programs where your loans won't be forgiven for 20 to 25 years, whatever is forgiven is taxable as income. So that means, I'll just use an example. It's a very real example. Let's say you were working for 5 years, qualified employment. Then you decide to go to the private sector because for whatever reason. Now you have 15 more years to pay your loan, but you're also behind 5 years of preparing because the student loan is growing. Yes, you might be paying it down, but 15 more years later, when the forgiven balance is taxed as income, you're going to have to cough up some money that you could have planned for 5 years more. And that's where additional services, my company, helps for people that have sizable student loan balances in the $300,000, $400,000 range or less. It really doesn't matter. Just prepare if you leave public service loan forgiveness, the qualified employment. And here are some precautions I mentioned. If you do have to consolidate any loans from Stafford or FFEL into direct, you will restart the clock as a brand new loan. Why that matters is sometimes, actually my old classmate did this. She fell behind on some loans and consolidated all of her direct loans, which means now she's at day zero. Her 20 years started over. So that's something you want to do strategically. And if you have non-direct loans, you pretty much have to do that to qualify for public service loan forgiveness. Parent Plus loans, if you have those, they're severely restricted. They're not the best loans to have, but there are very few options to help minimize your monthly payment. There is no one-size-fits-all income-driven repayment plan. A lot of the variables include being a single borrower, married but only one of you is a borrower, married to both of your borrowers, whether you file your taxes separately or jointly, and if you have W-2 versus self-employment income, that really comes down to they have more things to write off, so they can, in theory, lower the monthly payments. So even getting a side gig may help lower your monthly payments. And if you have undergraduate versus graduate loans, this won't apply to you all unless you leave the qualified employment. And then again, Parent Plus loans, there's a different strategy for that. And hopefully none of you have it, but if you do, there's still a strategy, but it's limited. This is a funny one. When I said the forms were incomplete, sometimes it's because they didn't enter the date properly. And I made this mistake. I actually spelled out the month, put the day, and then the 4-year digit year. And then I got to section 5 where it says enter the date like this. It's like, thanks. You could have put that on page 1, but oh well. I had to reprint it and start over. Those are pretty much the requirements. And that's the website if you ever need me for additional help. Are there any questions regarding the requirements for any of this that I could clear up?
I do. Is the 120 days, is that your time of employment, or is that your time of income-based repayment? Because I've been in income-based repayment for 2 years now, but I just started working here 6 months ago.
Okay, so in terms of public service loan forgiveness, it has to be employment at a qualifying employer. The good news though is the 2 years you have, let's say you left and went private somewhere else, the 2 years will count towards the other programs, the 2025 year, but not towards public service loan forgiveness.
Okay, thank you.
Yeah, I have a question. How often would you submit the application?
Annually? In
Uh,
which one were you referring to?
The one to qualify for the forgiveness loan.
So yes, I'd recommend annually just to audit them to make sure they're counting all of your months.
Okay.
Okay, so
I have a question. So I'm looking at consolidating now or in the next couple of months, because I do have the Parent Plus loans. And so you had said, when you said make sure it's a direct consolidation, does that apply to the Parent Plus loans also? Or will
yes.
it does? Okay.
Yes. The downside with Parent Plus loans is that you can only qualify for what's called the income contingent repayment.
Right. That's what I
Not the
have.
best plan. Now, it is a strategy where we came up with something completely legal because we follow the law. You can, if we do 2 rounds of consolidation, which means you have to have at least 4 of these loans, you consolidate 2, consolidate the other 2 into their own. That doesn't count. But when you consolidate those 2, then you can qualify for the other repayment plans. So it's multiple steps.
So I may need to call you.
Yeah. So the good news with that, so the income contingent, the monthly payment isn't going to be as good. But if you do it, what I just described, you can qualify for the revised pay as you earn, which is only 10% discretionary income versus, and the poverty line is 1.5.
Right.
Where they, all the funny stuff. But that's the only way to get a really good repayment plan.
Okay.
With Parent Plus loans.
So how can I contact you to discuss this further?
Sure. Go to that website right there. And
okay.
There's a link in the website to schedule a time to talk.
Excellent. Thank you.
Yeah, you're welcome. And yes, everyone else, if you had questions afterwards, that's where you can find me.
I had a question. What was that form that you had mentioned earlier? If you did not receive it, then you did not qualify. Your employer did not qualify.
So this is from Fed Loan Servicing, and if your employment does qualify, you'll get this. So it's from Fed Loan Servicing because they're the only servicer that will handle the public service loan forgiveness. If you had like loans from Gila, they'll transfer over to Fed Loan, but you want to make sure you get this after you submit this one.
Okay, so if I submit it every year, then I should be receiving one every year.
Because they'll be verifying how many months you have since you're submitting this every year. Yeah.
That's really helpful information. I have never received one of those forms, and I haven't done it since I've been here, but I've worked for other nonprofits and filled out all the PSLF paperwork and never received any one of those forms. So that's good to know.
So did you get a rejection letter at least, or nothing?
Nope, wow. Nothing.
Well, so good news is you can still use those employed
Revert.
months to count, provided it was full time.
Okay.
But again, caution if you're consolidating your. Do you only have Parent Plus loans, or do you have personal?
Oh no, I have personal and Parent Plus loans.
Okay, so it'll benefit your personal, but if you're consolidating Parent Plus loans, it'll restart the clock on those.
That's fine. That's no problem.
But it'll still save you a lot of money.
Right.
Yeah, I've seen people with $300,000-$400,000 in student loans, and it saves them a lot of money.
Yeah. Yeah.
Carl, I have a question for you.
Yes.
My question is, when you say 120 months, if I make a payment once a month, that counts as the month. But what if I make 2 payments in 1 month? Does that count as 2 months, or does that count as 1 month?
It counts as 1 month.
Okay, so it does have to be the time frame of a month.
Yes. Yeah. So prepaying doesn't help you unless you're in the DoD, and also the CARES Act, it counts automatically. So this is a great time to pay it down. But if you do the math and it doesn't benefit you to pay it down and have it forgiven, then that's something to look at as well. But back to your original question, each month you have to make a payment.
A question. So in this form that you have up, where the box that's checked, would it provide us spaces to list more than one employer if both employers are qualifying employers, or are we only allowed to, is it just the one that we're in currently?
So do you mean, do you work for 2 employers simultaneously? Is that what
No,
you're
like
asking?
if like before I worked here, I worked for another organization that I think would also qualify.
Okay, yeah, so you'd submit another one for that employer.
Okay.
And the rest of this form, it'll ask for the EIN of the employer, and someone there will verify if you were full-time and how many hours.
Okay.
So yeah, for each employer, you want to get one of these.
Okay, thank you.
Alrighty, so if there's any questions later, there's the website, and I hope that was helpful for you and that your loans get forgiven.
Thank you so much for your
Thank
time.
you.
Thanks for coordinating
Thank
with us
you.
and coming today to talk about this program. Hopefully some folks can use it here.
Yes, yeah, don't be one of those 98% of people that just didn't do it right. Alrighty, so if that is all, I will leave you to your meeting.
Thank you, Carl.
Alrighty,
Thank you.
thank you.